Welcome to day 4 of KiSS 2.0, live trading and live coaching. I'm super excited. It's been a great week and we're going to go ahead and hop right into it. So today I'm going to focus on trading a small account. We started with the $10,000 account, I believe, or maybe it was 5,000. I think we did 10,000 before that. So I just kind of wanted to do different types of balances because everyone works with a different balance. So today I'm working with a $500 balance. So the very first thing after reviewing our trading plan, what we want to do is go to the position size calculator and calculate our risk for the day. So you enter $500 because that's your balance. Your risk ratio is 2%. You can take any trades that I take inside of your demo. Any demo that you have, you can use the $5,000 demo if you want, and you can just calculate your risk exactly like I do it here. So my stop loss, I'm doing a 30 pip emergency stop loss, and my risk, my total max daily risk is $10. So today, this is the most that I can risk. I'm not willing to lose more than $10, which is 2% of my overall account balance. So in order to do that, I have 33 cents to work with. That's all I can use. So my lot size should not be higher than 33 cents when I get into trades. So now that I've calculated my risk, I have that written down in front of me. I'm now going to go to Forex Factory and I'm going to check high impact news. Right now it's 7:30 a.m. my time in Arizona, and it's all low impact news. So no red folders, no medium impact folders that I have to worry about on here. Now let's cross check that with my FX news so that we don't get thrown off and just see what's happening. So if I go to my FX news, it's pretty much the same, but we do see medium. There's a medium folder on Canada's currency, which we don't work, well, I don't really trade that. And so I don't really have to worry about that. We see UK, that's in 9 hours from now. So I don't have any high impact or even medium impact folders that are really a concern right now. But of course, we always want to exercise caution, but this is good so that we don't get thrown off in case something goes crazy and we're questioning what happened. So now that I've checked the news, usually I just close these tabs out after I've checked it and I've noted it. So I don't need to refer to that anymore. I've already calculated my risk and I have that written down. So I'll go ahead and close that. So I just have several tabs open on my window. I'm on my desktop. And as I shared before, I like to enter my trades in my mobile because I have this journal. So this journal is also accessible from my mobile phone. So I have Airtable downloaded on my mobile phone, and I also have TradingView downloaded on my mobile phone. So I really love TradingView. I like to chart on my desktop, and anything that I chart on my desktop, it will transfer over into my mobile app. So once I go through calculating my risks, checking high impact news, I've looked at my trading plan just to remind me of my trading rules, and I get into my pre-prep mode. I then pull open my trading journal. So my trading journal is up and now I'm ready to enter trades, and you'll see that I'm actually currently entering information because I'm actually in a trade. So as soon as we got on, I identified a trade with AUD NZD. So I'm gonna walk you through that right now, and you'll see that on the 4 hours, so remember, we're in New York session, we are currently scalping, and we are also, you can intraday trade if you want to. But so here's how we approach this. So on the daily, you can see what this pair has been doing. You can see that it's in an overall uptrend right now, but this, I believe, is headed for the downside. Can't see, I'm sorry, black app on my Airtable login. I'll come back and answer your questions, I promise. Okay, so on the daily, if I remove this trend line, you'll see that price was in a strong bullish structure, and it still is. And you'll see that it came to a point where it didn't want to go any higher. So you had a double wick rejection here, and this is on the daily. So when I see things like this is an excellent swing trade opportunity based on, as I shared with you before, the swing trade strategy that Brian and I use, actually that he actually created. And I just kind of added my own thing to it, but it's an amazing strategy. And we'll be sharing that more in the future as well too. But you can see here that the last time price retested or was in this area was back in November 7th of 2019. So we from putting rules together and executing the market, we find opportunities, like very high probability opportunities like this. And you can see we actually sold this pair together and we got in right about here at the wick. So just from this wick, and my take profit was right somewhere around within here. um, it was already like 100 pips within this area here, and that's a nice swing. 100 pip trade on a swing off the daily. These are the type of opportunities you can find all the time. But even though we're scalping and intraday trading, I like to remember on Sundays, I told you I like to mark my main levels. And throughout the week, those are going to change. So when the week first started, I had a sell zone up in here because as price was approaching to the upside, I'm looking left to see where could it possibly reverse from. And that's exactly what it did, right? So now I'm not really worried about the daily. I'm worried about major levels of where I could possibly enter from. I'm sorry, I don't even have a take profit on my trade. Okay, but I'm doing good. So I'm more interested in viewing the 4 hour because I want to see what's going on the 4 hour since I'm intraday and scalping. And now you can see that although price has been in an uptrend on the daily, we're more concerned about the 4 hour and the 1 hour because that's the time frame that we're in. Now, if you don't do any intraday trading, you're only going to be interested in the 1 hour because that is the current trend that you're in. And remember when we talked about market structure, we talked about you have to identify the market structure first. So as you can see, if you compare to the manual, price was buying. So this price was headed to the upside, right? Came to a point where it didn't want to go any higher. So now we have a high and then we have a low. We also have a lower high. And now you can see this beautiful market structural pattern created, right? So this tells us that the market is in a downtrend on the 1 hour. So if it's in a downtrend, then should we be looking for buys or sells? Type it in chat. Looking at this market structural pattern, what would you be looking for? Right. So you're going to absolutely look for sales. And you know that if you are looking for buys in a downtrend, then you are looking at a counter trend trade. So look how powerful this is, because if I get rid of all of these, you don't have to do this, but especially if you're new, or even, don't neglect the trend lines. A lot of I see professional traders do, but I think they're good to use. So if we take our trend line and we simply just do this. Normally what I do is I turn this to a line chart and then I just kind of line it up with the swings. But what you're going to find is that when you turn it back to a candles chart, the wicks will be going through it. And that means you have a correctly drawn trend line. So that's a good thing. So if you look at what's going on, you have a trending structure. This white line right here that I have, this dotted line, this is my emergency stop loss. So this is my 30 pip stop loss. So you'll see on my position calculator that we went over, 30 pips is the most that I can risk right now in this session. So I'm not going to risk 30 pips, but it's my emergency stop loss. I have actually two positions going right now. And my plan is that I know how much I can risk. I can only risk $10. I don't know how much I'm going to make, but I know with this strategy, I know that it works. It's a high probability strategy, so I'm not going to freak out. But if I only have 30-cent lot size that I can play with, I'm going to enter. So I'm looking at this and I'm looking at where price is now. So we're on the 1 hour. I can even go down to the 15-minute and see what price is doing on the 15-minute, and you'll see that it rejected off of this zone, right? And I have this zone highlighted because if you look on the 4 hour, for example, you can see where price, you can see the market structural pattern, and you can also see where price has either respected this zone, rejected it, it was previous strong resistance, it became support, it became a strong level of support here, rejected off of it, came back, broke through it. In the future, it came back, broke through it again, and then rejected off of it. It became support. So because we have this market structural pattern, how we make sense of this is that if this market structural pattern is to continue, let me go down to the 1 hour, then it should come to this zone. It's going to definitely attract seller interest because as sellers, we want to sell and continue with the trend. So this is going to be a level where selling pressure is now going to come in. And it makes sense because, as you can see, in the last 4 hours, look how much price went this low. It rejected off of this area, which if you look left, this was also a rejection area. This price also rejected off of here. And we're seeing that same thing happen in the future. And within the last, in the last 4 hours, or in the present rather, in the last 4 hours, price has gone from here. So this was probably during London session, all the way to up here, and that's about 43, 44 pips. So this is a good opportunity. I would feel really good about taking this trade because there's a lot of confluence in this trade. I have a trending structure. Price is at a major reversal zone. So part of our entry criteria, we find our trend, right? It's so repetitive. We find our level. So we found our level, which is here. Now, if price, now, how do we know that the trade is no longer valid? Well, on the 1 hour, if I'm looking at this and I'm looking at the market structural pattern, this area here where price is, it should not break your previous high. So if I turn this back to a candles chart, really this is the actual high right here because it's a strong, it like clearly sticks out. We don't want to identify minor highs. We want to identify those major highs. So although if price were to break this trend line, I'm more so looking at, I don't expect, especially because all of my confirmations has pretty much come together. Now hold on, because I'm supposed to be scalping. Okay, I'm doing good. So because I expect for all of this to come together, and see, I have a 5-minute confirmation now. So you'll see that I have a 5-minute confirmation. And now my 15-minute is coming together. So this is why I tell traders, do not just rely on the indicators. You want to, you can still be profitable just relying on the indicators itself. But the problem is that most traders, and in the past, what my experience was, is that for indicator, if you're just going to use the indicators, you also want to understand price action. You need to know how to know, you want to be able to understand a chart and what is it doing? Because if price suddenly, you think it's going to sell, but it suddenly does something like this and shoots up, well, some traders will say, I was in it and it was successful, and then all of a sudden price turned around and I don't know why. And that's a problem. We should never have to experience that problem. So in my opinion, you don't want to just rely, you have to find what works best for you, but you want to pay attention to this chart first because this is the main story for you. And if you can really make sense of this and become confident with it, your trading, in my opinion, will be a lot easier. And then you use this to give you confidence and more comfort in getting into that trade. So you'll see right now we have a 5-minute confirmed chart. So what I do as I go along is I'm journaling exactly what I'm seeing. Now I'm in 2 trades that already went into profit, but I've been preparing and talking and forgot about it. And I didn't have a take profit on it because I had planned to just quickly scalp it. But it's okay. So what I do, I have my notes in here, and now I say 5-minute confirmed, or I say 5-minute all KiSS rules. And now as I have that, I go to the 15-minute. So I'm done with the 5-minute. After this is confirmed, I don't need to look at this because usually what this tells me is that once this is confirmed, usually the 15-minute comes together. And when I see rejection, so part of our entry as well is wick rejection. And we see that here. And it's not always going to be 100%, but I can tell you that it is about 90% reliable. So now that I see that, I'm just being patient. I'm letting things come together. You can see how everything is pointing down or trying to come together, except for the MACD. And I'm just waiting patiently, and I'm just watching how price plays off of this. Now, where do I take profit? So if you're going to be scalping, so what I would do is looking at the 4-hour and also the 1 hour. If we know that this is a great intraday pattern and also scalping, because this market structural pattern is clearly defined, and you have at least 40 pips within here to play with that you've seen price move within the last 4 hours, okay? So I would take profit within this zone somewhere. That would be my execution plan. So I'm looking at the 1 hour, and I have a take profit right here. However, because I scalp, you're not holding a scalp for a long, long time. You're in and out of trades very, very, very quickly. I could have closed like probably 10 trades right now, but it's hard for me to trade and talk at the same time. So I'm going to show you my results, but let me switch to my cell phone so that you can see this in real time and see exactly what it's doing. So let me do a new share. And I'll just kind of go back and forth so that you can see what this all looks like. Oh no, I think I started the recording and I don't think my sound is on. So hold on one second. All right, so this is the trade that I'm in. So you'll see that I have two trades running, right? And notice how I got in at 0.773 and I also got in at 0.776. So just a 3 pip difference. I have one stop loss set because I know what my max is. And I don't have my take profit yet. I can put that in, but I hadn't yet because I could have closed like so many positions by now. So that's the thing. When you are trading, you're going to trade according to your style. You might be busy, you might be doing something, and you might just put a 10 pip take profit. For me, within that 10 minutes, I could be closing, 7 trades, for example. Now, remember, I can't use more than 30-cent lot size in order to stay within my 2% daily risk. So see, like right now, like I can close this out because remember, we're scalping, right? So even though I know I have $10 to play with, I'm just going to, and now since I closed that out, so I closed it out at 0.776, I'm gonna set another order at 0.776, 0.776, just in case price goes back there. It might not, but that's okay. But price often pulls back a lot. So now let's go back to the chart and see exactly what it's doing. Okay, and so now we see what's going on. So we see our 15-minute coming together, right? Now I could have closed both positions, but I just want to see possibly if price is going to keep going or is it going to pull back. So we're on the 15-minute time frame. And you can see that this MACD has also crossed. So usually when the MACD starts to cross, this is confirmation that the trend will start to change and go your way. So you just kind of patiently wait it out. You remember you could have closed several positions by now. So from this wick rejection to where we are now, it's about probably 10 pips roughly. Okay. So you could have had, 2, 3 positions constantly closing them out, let price pull back. But what you'll find is that even though you are risking $10, this just works for me. So don't think of it as, oh, you're risking $10 to make $2. No, that's not what it is. It's you have $10 to play with, but you don't have to use that total max lot size or daily risk. So if I got into this trade and only used 30 cents a pip, and if I was going to have a 30 pip stop loss, then I could only enter one position. But by breaking this into multiple lot sizes, I'm now giving myself room. And if I know, based on what I've tested, how my strategy works, I don't even have to use a 30 pip stop loss. I know that if this doesn't respect this structure level, I could close this trade if I want to, especially if I'm scalping and I'm in front of the chart. I can close this very quickly, watch what price will do, and I can execute another order if it starts to reject at the next major zone up. However, if it breaks this market structural pattern on the 1 and 4 hour, the trade is no longer valid. I'm out because it doesn't match up with my rules anymore. Okay. So what I like about this is that you are sticking to your overall daily max risk. You have a high probability strategy that you've tested and it works. And really, this is just an emergency stop loss. It's not what you're really likely to hit. I don't really hit stop losses anymore, honestly. When I do have losses, it's because I'm closing with a very small loss. So you'll see in my profits that I have large profits or even decent profits. And if I have a loss, it's very, very small. And that's exactly what you want to see in your trading journal. Okay. So at this point, I've already closed one position. So it took probably actually, my first position closed like, let's see here. I think I closed with 4 pips. And I was actually in the trade. I really got this within a few minutes. I would say with like 4 minutes, but I just didn't close it. So usually I put 4 minutes, on my first one. Now, if I would have done 3 trades at the same time, then you can put 3 positions. This means you open 3 positions at one time. But since I had actually had opened a second position. So what I could do now is, since I closed it out, I could go and enter the next position that I open. So this is how you start to, and it's still the same conditions. You just mark the same conditions. You put price pulled back. I got a second re-entry, or I got a third re-entry. So what you do is, how you use this is you start to say, wow, okay, when I trade this and I'm racking up on these pips, it's because price is pulling back multiple times. I had multiple opportunities to re-enter. And that's how you start seeing what your edge is or what your advantage is, because you see it play out over and over and over again. So what I'm going to do is go to my journal, and then I'm just going to put 5-minute all KiSS rules confirmed, 15-minute coming together, closed one position. And then you can just, and you can even say close one position, had opportunity to close multiple positions in profit, and always put like what you were doing, busy, whatever. You just want to be totally honest with yourself when you're journaling, because this is going to help you grow. So then what I go and do is I take a picture of this on my desktop. So I'm on a Mac right now. So I just take a picture of this. I then take a picture. I don't always take a picture of the 5-minute, but you can. So you can take a picture of the 5-minute, really the 15-minute. I include in my recaps because that's the last one that I look at on the indicator chart. But you'll see here, so you'll see this. I still have one position running, and you'll see all the settings are in the manual. I have all the settings for you inside of the manual, but I will answer that for you quickly. Just to let you know, though, you can find it in the manual as well. Okay, so now that I'm on Airtable, you'll see I'm on my desktop. So I can even do this from my cell phone as well. Like if I'm trading from my cell phone, I can take a screenshot on my cell phone and just upload it to my Airtable. So what I'm gonna do is drag this to Airtable. So that's one picture. This is the second one. And I promise I'm going to answer all of your questions. This is the third one. Thank you, Annette, for providing those settings. All right, so I got my recap, right? So I like to include my recap, and then I just kind of let the trade do its thing. And I also, if I'm in the trade a little bit longer, I also will keep adding recaps of the progression. So we're looking at what price is doing right now, right? Look at this beautiful wick off of the 1 hour. Okay, so we found our trend, we found our level, we found our signal. Part of our signal is wick rejection in a reversal zone. Like, it's so simple. We have a market structural pattern, and now we're just letting our trade play out. So at this point, I could close it. If I was happy, I could close in profit, or I could just be patient and wait. So now I can say, okay, where do I want to take profit on this? So I could even probably take profit from, I think I entered somewhere up here, to about maybe 15 pips. If I wanted to do that, I'm confident I could get 15 pips with that. So even if I wanted to leave this trade running and if price did pull back, I can enter again. So I'm going to go ahead and edit this, and I'm going to put 0761. So as you can see, it's totally up to you where you want to take profit. You just kind of find your style with this. And that's what I like about it. You find your style and you make it work for you. But once you find these rules that really meet your criteria and they play out over and over again, you have confidence because you know that it works. So for me, I have one position running. I'll just let it run. And now, because I didn't over leverage, I can go and, let's say if I have another backup pair and I'm like, oh, GBP USD meets all of my criteria, I still have room to open more trades. So that's why I say you don't know, how much you're going to exactly make every single day. I don't make the exact same thing every single day. But I notice that as I trade with a particular balance, I make on average a certain amount every day on average. And it also depends how much time I'm trading. So if I'm trading for, let's say, an hour versus yesterday, if I only traded for 30 minutes, my second day might be a little bit more profitable. So you have to keep those things in mind as well. So now I'm just being patient and letting the trade play out. I think I have my take profit in here, and that's pretty much it. So you just keep journaling. Or if you're busy or you got to step away, you just let the trade do its thing. You have your stop loss in there. You also have your take profit. But of course, when you're scalping, your eyes are more on the charts. So while this is playing out, and this was another beautiful example, we've had some great trades this week. We saw all winning trade setups this week, but I've also shown you how it can go wrong and what to look forward to. So you're going to watch those things, okay? So let's just see. You can see what price is doing. We're on the 1 hour. And I also will just tell you this. I keep this I keep this as another confirmation. So you'll see this in the manual. You'll see that I also use this 50 period MA, and I don't give the settings for this because I don't always use it, but just in case you want to use it and keep it on your chart, I'm going to give you the settings for this one. So the input is 50, close, and 0. And then my style is just default, and I keep it purple. And I keep this hidden. So you'll see on my chart, I click on the little eye for hide on TradingView, and it will hide it. But when I want to use it, then I just put it on there. So I use this also for Confluence for multiple confirmation because I just want all the confirmation I can get. So I like this because it also is a confirmation of the trend on the time frame that I'm on. So the 1 hour, as long as price is below this 50 MA, that's another confirmation for me. But if I saw price crossing this 50 MA, that's a sign to me that I could use this as part of my exit criteria as well, instead of waiting for it to hit a stop loss up here. And you'll see that every time price cross this 50 MA, this is also, some people use this as a trading strategy, but every time price cross this 50 MA, it pretty much it held it as support, right? Down here, it holds it as resistance. So that's why I use the 50 MA, and I really, really like it. Okay, so we can see kind of what's going on. So I think there's a question about, is it a 50 MA or, yes, it's a simple, it's not the EMA. So it's a MA, okay? So I'll go back. I know I had some questions, and I'll keep letting this trade play out. And I'm just going to stay in it for a little bit longer, and then I'll show you the end results of it, and maybe we'll identify another opportunity before we go and wrap up. So let me go back and just see what questions we had. Is it possible to have the levels and indicators on the same chart? Yes. So I am using TradingView, and I'm using the free trial. So I'll say it again, that when you create a TradingView account, you need 4 indicators to set up the KiSS chart. So in order to do that, you have to either subscribe to their pro plan, which I believe is like $10 a month, I believe, or you can pro plan, or you can do the 30-day free trial. So they offer, I think, every new account a 30-day free trial. You can do the free trial. What you would do is set up your charts, and then you can decide if you want to stay with the trial or cancel it. From my experience, after I actually paid for a couple months, but after I canceled it, my charts have always stayed. So as long as I don't make any changes, they stay. So what I did was I created this chart, I saved it as a template, and you'll see that my templates here, so this is like the template area. I created a KiSS template when I was on the trial, and I created a structured trading template, which is this one that you see right here. Okay. But if you upgrade, you can have all of this on one page. I noticed with this strategy, you're in profit quickly. Yeah, you do go into profit pretty quickly, especially when you're trading from those major structure levels. So that's how you can really perfect your entry. And price usually respects major structure levels. So once it breaks that, you always just want to pay attention to where that next major structure level is. So if that next major level, for example, is 10 or 20 pips away, because I have a large balance, I never put a stop loss close to a major structure level. I just don't, just only because I've journaled enough to see that it usually always turns around. Price usually always, not always, but majority of the time, it turns around near a major structure level. So that's just what I've noticed. All right, so Betty, you have the settings. I believe you're good. Thanks, Annette, for helping out with that. Okay. Let's see here. How do you know how far to go from entry. Is that when you look to the left to see your previous area of support and resistance? Yes, absolutely. You're spot on. So, in terms of finding your levels, and remember how I talked about on the daily, we find our level. Well, for me, I find my levels in the guide. I teach you to find your levels on the 4 hour and the 1 hour. What I like about the daily is that I just feel like you find the most forceful or you find the strongest technical levels. However, and that's where we want to trade from, because we're gonna minimize our losses when we trade from the strongest technical levels. But you can also look at the 4 hour and find those levels, because you can see here clearly. So if I turn this to a line chart, remember I talked about finding those areas that really stick out with your naked eye, and you always want to have your eyes on those type of levels. Okay, even within here. And then, um, and you can see even when price came here, you would have had you would have had a KiSS opportunity. And so now we're looking at price, I think, within this area. But the reason why we're looking within this area is because we're looking at the market structural pattern. So remember that we might start off with these zones, but as price changes during the week, we need to adjust our zones based on what price is doing. So if I turn this back to a candles chart, I can see what price has been doing. So obviously, if I'm looking for a sell and it's a downtrend, now see this 50 MA is on here, and see how this how price, it's holding it up as support. So this could tell us that price is now in a buy trend on the 4 hour. And it's still in a downtrend, but this could be part of your confirmation to take a buy. So it's so many different things that you can put together to create confluence. But remember, if I'm scalping, I'm more worried about the 1 hour. So now the 1 hour looks a lot different. And anytime we sell, we want to sell where there is a lower high, not a lower low. So remember, so for example, if I highlight all the lower highs on my chart, you'll see that it made sense to sell in those areas. So that's a lower high. This would also be a lower high. And now you can see that price had this impulse to the upside, and look where it stopped. But also notice that our trend line is also matching up and respecting. So now we have one touch, two touches, we have a third touch, we have a valid trend line on the 1 hour. We also have this price rejection here. So we've already seen that we have a lot of opportunities. I could have closed probably seriously like 11 trades by now, but I've just been I think I closed 2 since I've been on, because I've been talking and teaching at the same time, but I still have 1 position running. It's moving a little bit slower right now. But if this was the only pair that you traded, I feel that that's what also makes it easier, because you know how that pair moves, so you don't freak out as much, because it's like you're in a relationship. You can predict the behavior of this pair and really understand it. So if you have 2 or 3 good pairs that you can find that, then that would be ideal. But again, if you want to trade every single pair, you can do that. But you also have to be cautious with cross currency pairs and things like that. You never want to be in a pair where let's say you're in 2 sales and they're actually going against each other. So if you don't understand all of that, you want to make sure you avoid it and just stick with maybe 1 or 2 pairs at a time. All right, so let's see what other questions we have. So do you look over your journal every day? Well, it depends. If I usually like to look at my journal on Sundays when I'm prepping. So now you can see, I'm going to finish answering your question, but now you'll see that price is pulling back. Okay. So remember, we could have closed several trades within this opportunity here. It's just all about how you work it. And that's why, as a scalper, we're closing those trades really quickly, because we're trying to get small profits in quick time. And if you have a risk management plan and you know how that plan works, you're good. So you just try to make as much as you can off of the volatility that you're in at the moment, okay? And you have your stop in place. And you don't even have to use your emergency stop loss. Once you've racked up so much, let's say you close so many trades off of just this movement right here. If you've seen this candle go forcefully past this high right here, this rejection candle, you can close it immediately. You don't even have to wait until price gets here. We're not even going to risk that. Now we're going to change it because we expect that price will continue to go in the direction that we expect. It's all of our rules have been confirmed, and now we're just patiently letting the trade do its thing. But sometimes it will go the opposite direction and may try to retest another zone up. And that's where you don't wait for a stop loss. You've already racked up a lot of different, a lot of pips, because you don't want to make all those pips and give it right back. So in this case, since we've seen the trade play out, if price were to uh, push to the upside and push past this wick rejection, I would close the trade immediately. That's what I would do. And that's how you keep those losses smaller than your wins. All right, so I look over my journal usually on Sundays. What I like to do is look at the trades that I've taken for the week, and I like to see what I did well and maybe where I went wrong. So I look at some of my most profitable trades, and I compare that. I go back and I look at the charts, and I look to see exactly what happened and what went well. So if I wanted to look at my swing strategy, I will look at my swing strategy and I will look at my notes and observations, and I will look at what did I do well. And what I start to see is that when I do that, I start to see consistency in the strategy that I use, and I note those things. And that's when I'm developing, like when I was developing KiSS 2.0, I started putting it all in writing and just really noting what I saw and how effective it was and how it came together. So that's what started telling me that I had an edge with this strategy, because of the statistical data that I had been testing over time, over and over and over again. And I was able to also see what were some of the weaknesses of that strategy by simply looking at what are some of the things that went wrong and how can I get around that. So that's how I use it. The only time that I would look at my trading journal during the day or that same trading day is if I had maybe a really terrible mistake or something went wrong and I need to figure it out and I want to correct it right away. So that's how I use it. Let's see here. What other questions do you guys have? Kenya, do you erase your structure levels each week or do you just adjust your levels to match price? So at the end of the week, if there's been some drastic price movement, hold on, I'm watching this candle. So I'm going to set another limit order. Hold on one second. One second. Okay, so on this chart, I usually, when I mark the chart on Sundays, it starts to play out over the week. So I adjust it as the week plays out. Like, for example, this sell zone might have been up here when the week started, but now I need to move it down here because this is where price is. And you can see this is the most recent reversal area or structure level area. So I just adjust it throughout the week. And then when a whole new week starts, I find those major levels over and over again because maybe this pair could have been impacted by news. And now I need to adjust those levels. Can you talk again what the levels need to be on the MACD? Oh, okay. So Terry, answer that. Thank you. Can we look at Euro JPY, please? Yeah, absolutely. Let me just, if you're scalping and you don't go into profit quickly, does that mean your entry was wrong or you're on the wrong side of the trend? If you don't go into profit quickly, it could be a few things. It could be the pair that you're trading and the time that you're trading. So for example, if you're in the US session and you're trading a non-US pair, the volatility might not be as strong. So you always want to pay attention to that you're trading the right pairs, that you find the pair that has the right amount of volatility. For example, if I see that, even if it's a regular pair, like pair that I trade, let's say if it was Euro USD, and these candles were so tiny, like if I saw no momentum within the last hour, I would be cautious of that because I don't want to be in that trade forever. But if I see some nice movement has taken place within the last, 2 hours, or within the last 30 minutes, I'm all over it because that tells me that I can make some decent profit within that hour. But if price is really moving slow, there's not a lot of volatility, then yeah, you might be in that trade for a while. So it's not necessarily that you had a bad entry, because as long as you follow your rules that you've tested over and over again, and you only executed a trade per your entry criteria rules, you did everything right. Okay, so what's a good rule of thumb to wait to go into profit when you're scalping? 4 to 5 minutes is just really completely on you. Like if you are intraday trading as well, that it might be different because even though you are scalping, some scalpers like to let a trade turn into an intraday trade and some don't. Some can't do that because you really have to switch your mindset and you have to be okay with being in the trade a little bit longer. But again, remember as scalpers, you're taking advantage of that volatility. So it's really if I'm in a losing trade for 4 to 5 minutes, but I'm trading with the trend, I don't mind waiting a little bit longer to let that play out. Because what you'll find a lot of times is if you it's really your preference, honestly, but I'm just not gonna close a loss after 4 or 5 minutes if I know that maybe the session is just moving a little bit slower, needs a little bit more time to react. Because a lot of times you'll find that right when you close it, it'll go right into profit. So trading is patience, and that's why you don't have to be in a rush. If you set a level that you plan to trade from, set a sell limit and let it hit it. You don't have to rush and get into the trade because you feel like you're going to miss out. You can wait for price, like see how I have this zone marked here, even if I bought it down a little bit here, but you can see that it's retesting. So you can see that it's pulling back and it's retesting this area. And so it's all about how you work it. You know, if you close 10 trades by now and now it's pulling back, you might say, okay, I'm gonna set a sell limit at 0.775 because that's where I'm willing to sell. If it goes back to this wick, I will set another sell limit. You know, it's all up to you and how you want to work it. But what I try to do is I just try to get as much as I can and take advantage of this current volatility because I don't know what the market is going to give me exactly. So I'm just trying to capitalize off of that moment. How do you know you are in a lower high? So we talked about following the market structural pattern, and the market structural pattern, if you look in the manual, is simply just in a downtrend. It starts with a high and it's followed by a low. And if I turn this to a line chart, you can see it more clearly. And then it's followed by a high or a lower high, because that's what we call it. So your market structural pattern for a downtrend starts with a high, a low, a lower high, okay? And then a lower low. And then the next high is lower than the previous high. So this is called another lower high. So this is a lower high, this is a lower high, this is a lower high. And you'll see that these lower highs, it kind of follow these little patterns, right? So that's one lower high. And notice that when these lower highs are created, they also kind of line up with support and resistance areas as well too. So you'll see here, for example, that this area here is a resistance area. So resistance, resistance, resistance. If I turn this back to a candles chart, you can see it more clearly. Resistance, resistance, support and resistance within this area. Support, it was resistance and also support. So you see that. Does that make sense, Jason? Let's see. There's a recording from Monday all weekend. Is there a recording from Monday to all weekend? Yeah, you'll have all the recordings. I'm going to send them all to you on either Friday after our session or Saturday at the latest. You have an amazing gift. Oh, thank you. Appreciate that. So important when writing down the notes. Okay, yes, very, very important to journal and write down your notes. That's going to be your advantage. And a lot of traders don't do that. So usually when people come to me, it's pretty cool because for me, because I know how, you know, this has gone for myself, I know what to look for in other traders. And I always ask, do you have a journal? Can you show me a journal with at least 100 tested trades? And a lot of them say, no, I don't have that. I'm just going to be honest. I don't journal, or I've only journaled 5 trades this month. So what that's going to do is you're going, even though you might think you know how to trade and you have a strategy that works, you'll find yourself hopping around and doing a lot of different things because maybe you don't see the statistical data and how it's working for you. So as soon as you have a loss or something doesn't go your way, you don't understand it. And that's why you need your journal to help you grow. Okay, so someone asked me a question privately, so I'll get back to you when I can. Just stay on after the session and I'll go back to you, okay? Or if you want to ask publicly, you can do that too, but you sent it private. So I want to make sure I keep that private. All right, so what's the best trade for newbie? Example, scalping, etc. What's the different names is in your book? So, in terms of what's the best type of trading for newbies, that depends on your trading personality and your schedule and availability. So, when I got started with trading, I learned a lot of scalping strategies because that's what was around me. I didn't even know what scalping was, but I noticed that I was like, "Ooh, this is fun." And my personality is very quick and nimble, and so I learned that that was fun for me. I liked it. It didn't stress me out. I was all about scalping, and that's how I found my personality. And also, I had the time to scalp. So it's really, if you're in a scalp where you're closing very small trades in a certain amount of time, and that stresses you out, scalping is not for you. If you are at work and you love being in trades in the middle of the day and maybe just checking on your trades every now and then you know that intraday trading might be more comfortable for you. If you don't really like looking at your charts, you just want to identify levels, you want to maybe look at it once a day, then swing trading might be for you. What is the difference between a sell limit and a sell stop? So I'm going to encourage you to watch my YouTube channel for that. There's a lot of great content on that. If you go to Brian Kenya Horton YouTube channel and just type in sell limit or sell stop, there's videos that explains that. So I want to make sure that we just stay on the KiSS training. So looking at the chart, could you say that's maybe a double bottom forming? Where at? So we'll look at a naked chart first. You can clarify that and I'll tell you because I'm not quite sure where you're actually looking. Okay, can't wait for the recordings. Yes, you will have them. Do you use 50 EMA? No, I don't use 50 EMA. I use a 50 MA. So I share that. It's just a 50 simple MA and that's it. And I usually keep it hidden because I don't like a lot of stuff on my naked chart. All right, what swing strategy do you use? So I use my husband's swing strategy. It's called B Swing Strategy. He created it. He's actually creating the guide for that right now. We do teach it in the academy and have done training on it. It's an amazing strategy though, and I can't wait to share it with you all because it is so high probability. So it's pretty cool. Like I love to scalp intraday and swing, but my favorites so far are scalping and swinging. I love to swing. I love to swing because my schedule is so busy now that it's easy for me. Like right now, my kids are sleeping, they're home this summer and everything with COVID going on. So sometimes it's hard for me I try to scalp because I'm so successful at scalping, but I really need to be focused. Like I don't do well when people are around me. I treat this like a research project or a business. I just need to be focused. And so if I can't be focused, I don't trade. Now look what's happening right now. Let's look at price pulled back and look what it's doing. So I just want to catch this phase of this because see how I want you to understand looking at this, you could have closed a lot of trades already. And now you still have time to trade because you haven't hit that $10 max loss, right? So far you closed profitable trades and now you are looking at price retest and we're looking at exactly what it's doing, right? And now it's at this structure level. So now let's see if it's going to respect it or if it's going to actually break it. So we're on the 1 hour. Let's look at if this trend is going to break and we'll see. Because at this point, if you don't see signs of weakness and you see that this candle continues to forcefully push to the upside, I'm out. I'm not hitting a stop loss. I'm out because there's no telling it could just tell you that something different is about to occur. So I don't want to risk that. And you can see now that even though we have a KiSS confirmation here, now usually with your KiSS confirmation, everything is outside, it's way overbought or way oversold, and now that's no longer happening. So if this was to continue to the upside, the next opportunity would probably be somewhere within the next reversal zone. It could keep going. So if it breaks this trend line, and I'm wondering where could it possibly go, the only logical place for it to go, if I were to sell, I would sell right here to the left where this next reversal zone is, or right within here where price also reversed, which is only 11 pips away, right? So some people may want to stay in that, or they might say, I'm just going to cut my loss right now. But you look at how price is reacting off of this level. This is just true price action. And we could trade according just to this. We could say, you know what, I'm going to set how many pips is that? I'm going to set a 6 pip stop loss from here. And if I can, make a quick 6 pips from this or a little bit more, and I expect price will continue to go in the direction that I'm trading, then it'll go my way. But we're just looking and watching it play out. So this is just kind of how I look at the levels and just look at price action and make those decisions. You really have to be reactive to the market, even though you have, rules that you follow. You watch those rules, but once those rules have been confirmed, you've already profited and you might be looking for your next opportunity. You have to let those rules come together again and really be reactive to price action. Okay, so could gold go? Can your gold will be too volatile for the KiSS strategy? I guess gold is volatile to me, period. So you can decide if you want to trade gold. I have so many friends who love gold. They trade it successfully. Some of them like it, some of them don't. It's too volatile for me. I'm very conservative. I'm just very conservative when it comes to money and when it comes to even how I manage finances. I'm so conservative, but I'm also a risk taker. I try to be really smart. So I kind of stay away from gold. I don't understand what a swap charge is. If the market is open 24 hours, what is considered overnight? So overnight, look what's happening, guys. Just want you to see this. So overnight charge is it's the fee that you pay the broker. So they're going to make money off of this. So your swap charge is if you hold a trade. So the New York session, for example, it closes at 5 p.m. EST. So if you hold a trade past 5 p.m. EST and now this, because our market is 24 hours. So when a session goes from the New York session to the Asian session, you then are going to pay a swap fee because you're holding that trade overnight. So once the New York session closes, it's now considered a new trading day, and you will pay a swap fee because you didn't close that trade before the New York session ended. All right. So let's see. We have a few more minutes. I'm going to go ahead and stop the recording. Or actually, someone asked me to look at Euro JPY. It might be too late for that now, but so you can see what's happening here. We can either continue to watch this and you can learn from it, or we can go back to it. But I think we're getting some great learning in here. And I'm just going to kind of quickly scan some pairs, and we'll come back to this and see exactly what it does, okay? We'll see exactly what it wants to do. So now I'm going to go to, so let's look at Euro JPY. So let me go to, Euro JPY has been in an uptrend. All right, so I got this chart all marked up. I was actually teaching off of this the other day. So you'll see on the daily, that I have this chart marked up. So these are levels that I've been watching. I'm just going to get rid of some of this stuff. And now we can see what's going on the daily. And this has been in a very strong upward trending structure. So you can see right now, like Euro JPY is off the hook. But if I go here to the 1 hour, because that's the trend we're currently in, right? So in an uptrend, in a strong uptrend, I don't recommend taking these type of trades if you are new. Once you have experience, you can do that, but it's very risky because look how forceful this bullish trend is. Now, it could be coming to an end, but there's just no guarantee that it is. So you have to be really, really careful, because now that if you're in the 1 hour and we're trading with the trend, we should be looking for opportunities to buy, not to sell. Because at this point, if we even look at the 4 hour, look how strong this candle is, right? And we could look at the daily to see possibly where is it going to turn around. Now, it could just be retesting these wicks. Like if I move this up now, you'll see that price reversed right in here in the past, but look at all of this wick as well too. So this is price rejection, where price rejected this area and didn't want to go any higher. Now, how many pips is that from here? That is about 50 pips. So we wouldn't want to risk that, because this is look at the last time price, when this happened, this was back on June 28th of 2019, and price was right within here and it wicked this far up. So we don't want to risk that. That would be very, very risky in my opinion. But if you have a very large account to play with, you absolutely, like if I have a very large account and I know how to trade and I'm comfortable with that, I totally would execute the trade and I'd just be I'd be wise in how I spread out my risk, because this is, to me, it makes more sense to sell than to buy, because look how long this pair has been in this forceful, bullish, trending structure. I think that this is going to come to an end pretty soon, and it's definitely going to head to the downside. That's just my bias. So, based on that, though, even though I'm looking at the daily and analyzing off the daily, for short term, it's just way too risky, and I would not do it. Even if I saw a KiSS trade coming together, I just wouldn't do it, because there's no place that's really showing me, or, well, that's not true. Because we do see on the daily that it is retesting this area right here. So that could be what it's doing, because this is an area that's definitely going to attract selling pressure, and you can see that. So if I am a smart trader, I'm definitely going to, I can sell from here, because now I have a logical place to place my stop loss. This pair, Euro JPY, it doesn't wick very forcefully, persistently like GBP pairs. So I wouldn't be so afraid to do a sell from here, because even if price did come here as a swing trader, I would be even executing a second position from here. So that's just kind of my style. So that's what I mean by trading from these very strong structure levels. This is what I look for on the daily, and I wait for price to reach these very strong areas of structure so that I can take advantage of them. And with GBP pairs, that's how I trade too. So for example, I'll go to GBP JPY, like this would attract me when price comes here, when price comes here. This attracts me. This attracts me because I'm getting an awesome price, okay? The last time price was in this area, price, I'm sorry, excuse me, price forcefully swung from these areas. So as a swing trader, and I know KiSS is not about swing, but I just want to tell you how I kind of use multi time frames, and I make these different analyses. For me, it's all about, no matter what type of trader you are, you want to minimize your losses as much as possible. And that's why I had to really buckle down on risk management. And I realized, okay, Kenya, you are an awesome trader. You know what you're doing. But now you got to call out your weaknesses, and you have to focus on that. So I started asking myself, what are ways that I can limit my losses? And I started just brainstorming as many ways that I could do that. And I didn't have those answers overnight. It really came with experience. But I started noticing that the power of market structure and true price action, and really understanding what is going on at these levels. Why do people sell here? Why do people buy here? Why do people buy or sell at these minor levels? What are they thinking? So I'm always thinking about, for example, I'm thinking about you. I'm thinking about, what are my opponents thinking? What are the market makers thinking? If I'm a bank, where would I hit your stop loss? I'm thinking all those different things. And it's interesting that when I apply that, it really does line up. You see it all the time. Look at here, where if I were to get in here, I'm going to hit your stop loss. I know what swing traders do and what they're thinking. So a lot of this, I see it as market domination. You can see from just this level here that it wicked about 144 pips. That's a lot of pips. But you know what? A lot of swing traders use about 50 to 200 pips or more. Some even use more than that, because they know that market makers love to just wick us out and turn that price right back around. So it's so many things that you learn and that comes together. All right, so I'm going to go ahead and stop the recording and take the rest of your questions. For those of you who are watching the recording or in the future, I just want to wish you guys the best of luck with this strategy. And you can always go to the YouTube playlist and find KiSS 2.0 for more future trainings.